Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about GUOCO Group Annual Report. GUOCO Group Limited offers a diverse range of businesses and services across various sectors. These include principal investment, debt, equity, direct investments, and treasury operations, property development and investment, residential and commercial property development and rental income, hospitality and leisure, plus hotel management under Clermont, Thistle, and Guomen brands, plus gaming and leisure businesses with digital channels, Mecca, Grosvenor Casinos, and Racha Financial Services, plus commercial, consumer, Islamic, and investment banking services, plus life and general insurance, Takaful Insurance, fund management, unit trust, corporate advisory, and stockbroking services, other businesses, plus royalty entitlement of Bass Straits oil and gas production, plus health product manufacturing, honey, propolis, royal jelly, plus car parking space operation, and oil palm estate management, plus online gaming software development and distribution, plus credit transfer processing and general management services. GUOCO Group's stock price increase. A key factor, the recent financial reports have revealed a significant increase in GUOCO Group's annual profit, which has contributed to its stock price rising by a little over 11.47% in the past year. The company reported a 12.6% rise in full-year net profit, reaching HKD 4.031 billion, and announced a final dividend of HKD 2.9 per share. This positive development has exceeded the industrials industry average, with earnings growth outpacing other companies in the sector. As a result, investors have taken notice, leading to an increase in stock price. The primary drivers of revenue growth or decline for GUOCO Land can be summarized as follows. Revenue growth is primarily driven by the success of its residential projects, particularly in Singapore, where over 90% of units at Springleaf Residence were sold. Additionally, strategic investments in prime land sites and high-quality investment properties with high occupancy rates have contributed to revenue growth. The company's digital transformation efforts, including the development of proprietary platforms and targeted investments in technology, have also driven double-digit growth in net gaming revenue. On the other hand, revenue decline is primarily attributed to challenges in the Chinese real estate sector, which has resulted in an allowance for foreseeable loss on China development properties. Intense competition and market conditions in the property development segment have also contributed to a decline in operating profit and revenue growth in this segment. Net income and profit margins overview the financial performance of various companies has shown significant improvements in net income and profit margins over the past year. Net income has seen a notable increase, with GUOCO Group Limited experiencing a 10% rise in FY 2025. The company's net income also increased by 13% to HK $4,030.7 million. In US dollars, the net income rose from $585,743 to $701,896, representing an increase of $115,153. Profit margins have also shown improvement across several companies. Grosvenor's profit margin increased due to strong operating leverage, while Rank Group plc maintained its profit margins through disciplined pricing strategies and strategic brand positioning. The Bass Strait oil and gas business saw improved profit margins due to higher extraction volumes of hydrocarbons. Overall, the profit margin increased from 16.3% to 18.8%. The growth in net income and profit margins can be attributed to various factors, including investment in technology, legislative reforms, and strategic brand positioning. These improvements demonstrate a positive trend in the financial performance of these companies. The company is indeed generating positive operating cash flow. This is evident from multiple sources within the financial summary. Firstly, the net cash generated from operating activities in 2025, $957,030, is higher than in 2024, $1,016,995, indicating a positive trend. Furthermore, both GUOCO Land and Rank report positive operating cash flows in 2025, with figures of $153,578 and $164,201 respectively. Additionally, the consideration received by the company was $8.9 million, which suggests that the company is generating sufficient cash to meet its obligations. Overall, these indicators confirm that the company is producing a positive operating cash flow. The company's financial performance was mixed across various segments and regions. The hospitality and leisure segment, led by CHG, showed significant growth with a profit after tax of GB 43.8 million. The principal investment and financial services segments also performed well, generating profits before taxation of HK $403.3 million and HK $485.3 million respectively. The Asia-Pacific region reported strong revenue, totaling $3,125,894 in 2025. In contrast, the property development and investment segment saw a modest increase in revenue, while assets grew to $3.784 billion. However, some segments struggled. Manuka Health New Zealand, MHNZ, faced poor performance due to lost business and market pressures. The others segment failed to meet reporting thresholds for 2 consecutive years. Management's outlook and strategy. The management of GUOCO Group is focused on achieving long-term sustainable returns through a dual engine of growth in property investment and development. They emphasize building resilience into their portfolio by investing in equities with justified valuations and focusing on integrated real estate value chain capabilities. The company will continue to drive growth through targeted investments, adopt a cautious approach due to uncertain global economic conditions, and support its businesses. Key strategies include leveraging emerging opportunities, improving operational efficiency and cost control, investing in hotel infrastructure, and emphasizing employee engagement. The principal investment segment aims to produce attractive risk-weighted returns and create capital growth through equity and direct investments in global capital markets. Overall, the company is committed to sustainable growth, premium product strategy, and good corporate governance principles to enhance its value for shareholders. The company has a history of paying out dividends to its shareholders. In the recent financial period, it declared both an interim and final dividend. The interim dividend was set at HK $0.60 per share, totaling HK $197 million, while the final dividend was significantly higher at HK $90 per share, amounting to H $954 million. Concerns about inventory buildup and supply chain disruption. There are indications of potential issues in the company's supply chain. The increase in finished goods inventory by $27,933 raises concerns about inventory buildup. Although there is no specific information on current inventory levels, this significant increase suggests that the company may be struggling to manage its stock effectively. This could lead to inefficiencies and potential disruptions in the supply chain if not addressed promptly. That concludes the financial summary for GUOCO Group. Feel free to comment below, and I will be happy to answer them when possible.